This is Jenny. Jenny is a first-time buyer. With the amount of advice out there, Jenny is confused about what options she has for 2021. So we have broken it down into 3 categories. Category 1, deposit. Category 2, help to buy scheme. Category 3, getting a mortgage without the help to buy scheme. Let's look at Jenny's options. 1. Deposit. Saving for a deposit. Saving for a deposit can take a long time. Are you aware there could be a quicker way? For first-time buyers like Jenny, you could use a lifetime ISA. You can get a government contribution of up to 25%, worth up to a max of £1,000 a year when you save up to a max of £4,000. So if you are buying a home for £450,000 or less and are between the ages of 18 and 39, for every £200 saved, you get a government bonus of £50. And if you're a couple, you can each open a LISA. This could make a big difference to your deposit over time. Check out the government's website for more details on this in the comments box below. 2. Help to Buy Scheme 2021. Okay, so Jenny has now started saving for a deposit. But how much should she save? Well, there is a government Help to Buy equity loan scheme in place, which is a loan for up to 20% of the cost of your newly built property, which would mean you would only need to find a 5% deposit, and then a 75% mortgage makes up the rest. If you are in London, this scheme means you could borrow up to 40% of the purchase price from the government, instead of the 20% loan offered to the rest of England. The Help to Buy equity loan scheme is aimed at buyers who are struggling to save for a deposit, and applies only to new homes that are being purchased from a registered Help to Buy property developer, up to the value of £600,000. How much you can spend on your new home will vary enormously depending on what region it's in. The price cap starts at £186,100 in the northeast and goes up to £600,000 in London. From the 16th of December 2020, you will be able to apply for the new Help to Buy scheme. Only first-time buyers will be able to use the scheme, and it appears the current plan is to phase it out completely by 2023. So if you are a first-time buyer, you still have some time to take advantage of this. It's been announced that there will also be a regional property price cap to focus on helping those who need the scheme the most, although we don't have all the details on this yet. 3. Getting a mortgage without the Help to Buy scheme. Before the pandemic, lenders were offering mortgages with up to 95% LTV, which meant that if you didn't want to use the Help to Buy scheme, there were plenty of other options to suit your needs. However, after the pandemic hit, a lot of lenders removed these products from the market. But don't worry, Jenny. Recently, Boris mentioned a 5% scheme for home buyers. And although we don't have any more information on this yet, we are looking forward to seeing more details on this, hopefully at the beginning of 2021. For now, lenders appear to be more cautious, and buyers need to have at least a 10% deposit saved. Due to these unprecedented times, lenders are changing the LTV and lending criteria frequently. So we would advise you speak to a qualified mortgage broker to get the most up-to-date information and most suitable mortgage for your individual needs. So, just to sum everything up, saving up as much money as possible will mean you are more likely to be able to get a mortgage. Currently, there are no 5% deposit products on the market, so you may have to save a little bit extra unless you want to use the Help to Buy scheme. We suggest a deposit of 10% or more otherwise. The Help to Buy is available if you are a first-time buyer, so that's something you might want to consider. And finally, if you aren't going to use the Help to Buy, currently there are fewer products on the market for first-time buyers. So it might be worth considering saving up a little bit extra to help get you on the property ladder. For some free advice, you can always contact us here at WIS. Remember, as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the repayments.